Good evening, everybody. Thanks very much for joining us again. It's a pleasure to have you here. This week, in developing the theme of technical analysis, I want to take a look at oil in particular this week and how we could have used technical analysis to establish a trading strategy particularly on an intraday perspective. And I want to show you how I was sort of studying the oil market at this particular time and how it evolved from a technical viewpoint and the types of signals we were using and how we can apply that within a trading strategy. So, as I say, we're going to take a look at oil. And the first thing really, if you're trading on an intraday perspective, is that you should always establish what the technical backdrop is across all time frames. And it's very important to be aware that even if you're trading on an intraday perspective, you should be aware of the longer term time frame. So if you're trading, say, on an hourly or 4-hourly basis, always look at the daily chart, always look at the weekly chart, because the short-term perspective may well be developing in one way, but until you come to look at a longer-term view, so a daily chart or a weekly chart, that could be highlighting that the market is now approaching an important or strong level, be it a support or resistance, and that may have implications for the activity within the shorter-term perspective. So, talking about oil, let's try and establish how I would have approached the latest upside move in oil and how I would have traded that and the types of signals that I would look for. So even if I'm trading on an intraday perspective, I will always start with the weekly chart. And we'll take a look at the weekly chart and see if this was developing any positive themes as we came into market. Well, this is the weekly chart of oil. And for me, at the beginning of July, and for me, the important resistance level that I was monitoring, even though I trade on an intraday perspective, was the weekly Bollinger Band mid-average. And that was acting as a very important resistance point. And my view, even if I wanted to trade on a shorter term perspective, was that we would have to break and close above this weekly mid-average to trigger a more sustained upside move. The following week, we then saw further support, the market rally, and we then produced the close above that mid-average resistance level. So in my perspective, my view, the weekly chart was now beginning to turn more constructive. So having established more positive themes emerging from the longer term outlook, I'd then turn to the daily view and whether or not we're starting to see these positive themes developing in the same way from a daily perspective and how we can actually apply that within a short-term trading perspective. Well, this is how the week closed that week, and we were certainly seeing more positive technical signals developing on a daily basis. The MACD, the trending signal, was already above zero, so it was suggesting we were trading in an uptrend. Momentum was rising, so it was highlighting more positive themes developing from the speed of market move, and that within an already established uptrend would be a positive backdrop. We were seeing daily Bollinger Bands widening as the mid-average itself was rising. So this was reflecting positive volatility within the market. So the conclusion from the weekly and daily charts, even before I start trading on an intraday perspective, was that prices were breaking above the weekly Bollinger Band mid-average and the recent June high, which was really piquing my interest in terms of a more sustained upside move. The daily MACD was above zero, reflecting an uptrend. Bollinger Bands were widening on the daily perspective to increasing positive volatility and the chances of that extending the current upside move. And evidence seemed to point to positive risks for all time frames. And it's now that I would tend to look at the shorter term intraday signals to develop the theme that we've already established from the longer term perspective of the risk of further strength developing. And we would use, say, the 4-hourly chart to give us a timing aspect for these positive trades, because we know that the market is trading within a bullish trend from a weekly and daily perspective. So let's take a look at the 4-hourly chart and how this positive trend began to establish itself. Well, again, as the week ended, we started to see upside materializing, and the week was seeing this acceleration period coming into Friday's close. So this left positive indicators in place and backing up what we already had established from the weekly and daily perspectives. However, because the Bollinger Bands were positive, the risk was for further upside to develop, and the positive trending condition on a 4-hourly basis coming from the MACD and momentum rising. However, we're trading from a shorter term perspective, and this is Friday's close. So I wouldn't necessarily want to run that risk of holding a position from a short term perspective over the weekend. And I would rather wait for Monday's activity and see how I feel about the market at that time. So the conclusion I would take from the current week's trading in the beginning of July was that the positive themes were evident on the weekly, daily, and now 4-hourly perspective after the latest Friday's close, and setbacks, having seen a strong upside move already, would offer an opportunity to position for the upside. Now, the first support level that I would focus on within the 4-hourly perspective is the Bollinger Mid-Average, because that will always act as support within a positive trend. So we're viewing activity as we're hoping for a correction to start the new week. We know where the support point is, the rising Bollinger Mid-Average, and we're looking to establish longs into that correction move. Well, as it happened, the market didn't really correct a significant amount, but it moved sideways. It came back to the rising mid-average, and that acted as a support and started to see further upside developing. So from my shorter term trading perspective, I was looking to go long above the mid-average support. And this is an important point. It's not actually on the mid-average. It's putting bids just above the support level, because if a number of people are looking at that as being a support, you want to be able to activate your trade. Yes, it may be a slightly higher level than the rising mid-average, but you're more chance of actually getting into the long position because the market is seeing more positive themes. It takes less of a correction to convince people they should be buying. So always work a bid above the support point if you're looking to use weakness or a setback consolidation as an opportunity to get long. Now, if you missed that opportunity, so the market didn't quite correct back to your buy level, we're again still using the indicators as a timing signal. And basically, as the market rallied from this mid-average, momentum, the slow stochastic, started to cross higher within what is a positive trend. The MACD was above zero. Now, momentum turning higher within a bullish trend is a fresh signal to re-establish that positive trend, whether it's on the 4-hourly, 1 hour, 5-minute, or longer term daily and weekly perspectives. So even if we'd missed that opportunity to buy the setback, the momentum turning higher would be a signal to re-establish the longer term positive trends that we've established within the daily and weekly perspectives. And then as the market developed that move, we extended the upside move. The Bollinger Mid-Average was acting as a support point, and the market was trading in more positive themes, momentum rising, the MACD above zero. Now, if we hadn't closed our short-term long position against these resistance points, and to be honest, there wasn't really necessarily any signals technically to suggest we should. But what we should have done as the market sold off and broke below the rising mid-average was to think, well, the risks are that we could be looking for a more extended consolidation correction period. So that should have been a trailing stop on our long position, looking for a more corrective theme to develop if we start to break lower. And also both momentum and trending indicators have crossed below their moving averages. And that suggests an extended consolidation period. So another reason not to want to be active within the market at this time. So the market then, having broken below the mid-average, enters into another consolidation period. And The weekly, and this is the important point to stress, the weekly and daily perspectives were still positive. We hadn't seen any change within the bullish outlook for the daily and weekly views. So we're still looking for positive signals within the 4-hourly perspective to re-enter longs. And while the daily and weekly perspectives are still positive, there's no reason to go against that trend. So we're always looking for the 4-hourly view to re-establish the upside momentum, and momentum turning up with the MACD above zero gives us a fresh impetus to the upside. Again, it's the mid-average that acts as a strong support point. We never close below that level, and we should have been active within the market from a technical perspective, looking for further strength to develop, because the daily, weekly views were still bullish. The 4-hourly perspective was confirming that, and that skewed risks and risk reward to a much more favorable backdrop that we would want to take advantage of. So that's how I approached that particular trending signal. And this was the period that we were looking at. But how do things look now? Well, if we look at the daily chart, we've continued to move higher. We're above still the rising mid-average, and we haven't really broken below that point, haven't really tested it. Yesterday we did see a sell-off, but the market rallied back very strongly, and today so far we've seen further support developing. We're now starting to break the April high at 83.51. So the daily perspective, the momentum is still to the upside, and we're still looking at more positive trending conditions. Now, if we look at this alongside the weekly view, we can see that the break above that April high is more significant, because this looks like a potential reversal area. More positive themes continue within the daily and the weekly perspectives, and highlighting potential resistance points to any advance. Having broken this previous high, we would then run Fibonacci retracements on the March 22 to April 23 declines, and the 38% retracement stands at 89.38. So that would be the first focus from a longer term perspective, admittedly, but we can build that level within our daily intraday perspectives and trading strategies, knowing that this is likely to be the next significant and strong long-term resistance focus.